Welcome back to Financial Focus Radio. Thanks for joining us. Josh and I recorded one of those e-newsletters last Friday where we talked about the different asset classes that we think people should have in their portfolio and how those are doing and why they're doing. Some are doing better than others and what people should be expecting. So if you want to get added to our e-newsletter list, go to our website, northwestquadrantwealth.com, and you can get added to that list. We've talked a lot on the show, and this is definitely a bipartisan issue, I think. If you go back a few administrations, there's been lots of administrations that have been worried about China and what China is trying to do. It's sort of the next Cold Wars between the U.S. and China, and it's not going to be played out the way the last one was. But the Chinese are really, really working hard to try to displace the U.S. dollar as the world reserve currency. And one of the reasons the United States is afforded the luxury of doing all of the things that we do from a fiscal stimulus standpoint and what the Federal Reserve is doing in monetary policy and all the things that we can do where we just seemingly endlessly print money is because the dollar is the reserve currency of the world. But Josh sent something to me last week that Russia now receives more euros than U.S. dollars for its exports to China. So that's one of the ways in which China is trying to displace the dollar.
Well, and that's also a conscious effort by the Russians. Really the genesis of it was when we started sanctioning Rosneft and all of those.
It's two countries that are not our friends. Hopefully the president understands that the Russians are not our friends.
Well, yeah, and Putin's embarking on an explicit strategy of de-dollarization, and that just involves getting paid in alternative currencies.
But the important thing for us as Americans is if the dollar continues to weaken and for some reason at some point we were not the reserve currency of the world, we would have to change our behavior pretty dramatically. And so that's something that all our politicians should recognize. And some fiscal conservatism when things get good again or normal, whatever that means, is warranted.
Well, and still like 85% of the world's trade is conducted in dollars. So
right. And so we're still – it's not happening anytime soon, but the Russians, but more importantly the Chinese are working really hard all the time to try to speed that up. And the coronavirus, quite frankly, we've exposed our weaknesses. The coronavirus has sped that up and showed these countries, that we aren't as sort of infallible as we thought we were.
And the dynamic has changed a lot. I mean, when East Germany went behind the Iron Curtain, it meant that they were essentially economically disenfranchised permanently. And now, if you see what's happening in Hong Kong, it's essentially behind the new Iron Curtain, but the dynamic is so much different because the Chinese market is so overwhelmingly massive for U.S. corporations that China is almost going to use our own corporations as a mechanism to control us.
Yeah, and what happens with Taiwan is going to be interesting too. All right. Before we talk about where all the customers' yachts are, I thought we'd talk about the market and how skewed it is to large caps. So people think that the market is just killing it across the board. But when you look at the S&P 500, the four largest capitalization stocks in the S&P 500 were up between 24 and 71% year to date through the end of July. The remaining stocks in the $28 trillion index were down an average of 10% year to date over that same period. So four stocks were up a ton. And the remaining stocks in that index were actually down on average of 10%. So it is a really, really bifurcated market, and that's historically not been a healthy market on a go-forward basis. And it's really skewed. It's not actually what people think it is, and we'll see how this all plays out. Okay. There's a famous saying on Wall Street, and I like to bring it up as often as possible, but in the 1940s, there was some tourists in New York City and down on Wall Street, and the tourists saw a fleet of bankers and stockbrokers yachts in the New York harbor, and the tourists turned to somebody and said, "Where are all the customers' yachts?" And this was at a time when there was no really regulating, or commissions were much, much higher than they are now. And so that all changed in 1975. But the point is well taken, and I want to make the point in this segment to talk about how Wall Street creates products and is very good at selling these products to you, all of you out there listening. And there's a great sales pitch and story behind them, but they're really only good for Wall Street. And so there are lots of securities that were created after the financial crisis that were hedge fund-like asset classes, and they were created. Most hedge funds you all didn't have access to. You had to be an accredited investor. And so what they did is they created mutual funds that had strategies like hedge funds. They were called liquid alternatives. And the reason they created them after the financial crisis is the story was they would protect you on the downside, give you some of the upside, but protect you on the downside because people perceived that was going to continue. And the reason Wall Street loved these products is the fees were extraordinarily high. And so there was a study done since the financial crisis, and they looked at all of these liquid alternative assets, and they realized that all of them collectively earned $21 billion in return for the shareholders, but the fees collected from Wall Street was $22 billion. So, if you think about in aggregate, the fees collected from Wall Street made more money on these things than their investors.
1.31%, so 131 basis points weighted average cost across the liquid alternative universe.
When you consider you can buy an index that costs 0.01, or some of them are even free at this point.
And that's excluding like the actual costs that are internal to the fund for shorting and trading, et cetera. Yeah.
And borrow costs and that kind of thing. So our point is Wall Street is very, very – we talk all the time. Wall Street's very, very good at creating a perceived need that you all have out there.
Well, and after the financial crisis, what were people looking for? Number one was yield. So there
was downside protection.
Proliferation of products that pitched some sort of higher yield. And number two, volatility. And, we're probably going to see a resurgence in liquid alt strategies here in the wake of this market.
And another alternative asset class that really came to rise as a result of the financial crisis, because we see them when we do our free retirement reviews with all of you out there listening, is non-traded REITs. If I see it under the non-traded REIT in somebody's portfolio, I'm going to call the SEC and tell them to do their job, because these non-traded REITs, the only people making money on them are the people that put them together and charge huge management fees and the brokers selling them. And so, non-traded REITs, liquid alternatives, all of this stuff, fees matter and liquidity matters. And if you have a non-traded REIT, you need to fire your broker immediately, because he or she sold you on something that does not exist. And so they know it. These people know it. They're selling you on yield, and they knew they were putting you into something that was illiquid, but was going to pay them a huge commission. That is not alignment of interest with you and your advisor. And so you do not want that person in your life, especially financially. So liquid alternative assets, you don't want them in your portfolio. They're too expensive and the returns are abysmal. And non-traded REITs. Any of you that out there that have non-traded REITs, they are not what you think they are. The price that they're quoting on there is not real. There is no market for these securities. So you think they're doing okay. They're not. If you go try to sell these things, you cannot sell them. There is no market, or you sell them for half of what it shows on your statement. What other security is that true of? All right, if you'd like to take us up on a free retirement review anywhere you can hear us, give our office a call to schedule that, 800-743-0988, or go to our website, northwestquadrantwealth.com. When we come back, we're going to tackle some of your email questions, so stick around.
Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Northwest Quadrant Wealth Management, a registered investment advisor and separate entity from LPL Financial.